I'd like to welcome Alicia García Herrero, Chief Economist for the Asia Pacific region at Natixis CIB, based in Hong Kong. Alicia, it's great to have you for the Global Energy Outlook Forum as we look forward to 2026. We are now in 2026, and about sort of looking at Asia, of course, and the macro outlook there. We've just had an interview with Vitol Asia CEO and President Kieran Gallagher, and his insights on the outlook, for Asian energy demand and flows, and more specifically pricing and how traders might be looking to position themselves this year and going forward. I'd like us to focus the next 15 minutes on your insights on the Asian economies, really, and where those are going in the context of the trade tariff challenges that they've had, their industrial policy planning as we go forward, and of course what all that means for energy demand and flows. Let's start with the sort of trade question. Almost a year into Donald Trump's trade tariff wars with the world, really, but we're focusing on Asia now. Of course, we had the April announcements last year, but I'd like to really look forward now and get your point of view on how the ASEAN economies are positioned as they go into 2026?
Well, I would say that the word tariff has been taken away from our brain as we speak because of developments in Venezuela, and I would say export controls right before that. So in other words, tariffs are no longer the key issue in Asia. And why is this the case? First, because major things are happening, but that's not only the reason. Is that tariffs, from Asia's perspective, had already peaked sometime, I would say, before the APEC summit, i.e., the first in-person meeting between Trump and Xi Jinping. And why? Because it was quite clear that Trump was coming with an olive, sign in terms of, a more peaceful behavior towards tariffs, not only because of the reduction in so-called fentanyl tariffs, 10% tariffs for China, China managed to achieve, also because there were a lot of other deals. Malaysia was one, South Korea. Deals with the rest of Asia, which basically implied softer tariffs, whether it was sectoral tariffs and therefore I think for Asia it was quite clear, if we survive 2025, we can survive 2026, and Trump is not going to come with higher tariffs. He can't afford it. Affordability issues, midterm elections, you name it. And they did survive 2025 Asian economies really well because actually they grew out of exports. That was the most important source of growth for the whole of Asia, not only China, in 2025. So in that regard, tariffs are no longer the issue. The issue is really more like, will trade channels remain open? Yeah, physically. Will we have, new major events happening? What about the Taiwan Straits? What about, you name it, the Panama Canal? What about, all of those things I think are much more important at the current juncture.
Okay, you mentioned that they've weathered 2025, all right, especially the ASEAN economies, such as you said, Malaysia, Vietnam, as you said, their exports. A lot of people said what helped was the AI boom, which of course helped with all the sort of parts that are still needed, and America and the US needed that. And of course, that influences tariff policy. The other aspect which helped the other ASEAN economies, apart from China, was the rerouting of certain products through them, let's say to the US and to the West. Now, looking forward, is China under the same pressure, do you think, as we go forward? It's in a pretty good position, isn't it, a year on? Does it hold the upper hand in terms of that? And how does its own industrial policy going forward influence that?
Well, this is a very good question. It is frankly true that China might not need so much rerouting as it used to, because tariffs are actually, in some cases, quite close. Well, actually, India has higher tariffs than China as we speak. It's just unbelievable.
Absolutely, yeah.
The amount of rerouting through India is not zero, but it's not massive. The massive one is Vietnam, Malaysia, Thailand. But you if there were any from India, obviously there wouldn't be any more. So there is this impact which is negative for Southeast Asia, less so India, as I mentioned. But China still has actually built, I mean, it has invested in Vietnam. In other words, it's very hard to undo all of that. You can reroute, but you cannot rebuild. And a lot is actually FDI, especially Vietnam. So that will remain. I think Vietnam will not be negatively affected, in my view. The other thing, though, that is happening is that China is expecting less exports, generally, whether it's rerouting or not, just because the expectation is that the rest of the world will grow less. At Natixis, we have similar growth for the US, 1.8% next year, so no major change, but lower growth in Europe, lower growth in the rest of the world. And that is relevant for China. So in that regard, I think the year, if you tell me about energy demand other than the AI boom, I would be cautious.
Okay, what about China's expenditure? Okay, now it's consumer products, perhaps exports might slow down. As you said, the macro figures from the Western OECD economies might start to show this year a slower growth, and of course that impacts everything. But it's doubling down on its fiscal expenditure, on its clean tech industries, whether it's exports of those products or indeed investing on its own turf in that aspect. I mean, that also requires energy, doesn't it? As well.
But capex is actually coming down aggressively, and the reason is that the demand is also coming down. So let me give you the example of renewables, which is, I think, very exemplary in a way, because it's massive. As you rightly pointed out, capex for that sector was growing at the tune of 30% in 2023, slightly kind of peaking in 2024, plummeting in 2025. That's where we are. And why? Two reasons. External demand is waning, and partially because all of these green transition plans are not happening, or not at the speed that we were expecting. This is true for the US massively, but it's also to some extent true for Europe. We just saw the decision on diesel, and there's many more, so you can see that the major sources of decarbonization in terms of having the funding to do so are no longer there, or the fastest decarbonizing economies, especially Europe. So that domestic demand, because China indeed claims, and I would argue rightly so, that it will continue to decarbonize. It has peaked years in advance. Basically, it should be 2030, and it's already peaked in 2025. So that in itself would say, okay, they still need a lot of these renewables. The reality, though, is that they can't install, I would say, a single more. That's an exaggeration, but why? Because they have actually massively increased installation in 2025 because there were subsidies, which they have suddenly eliminated. And why? Because a lot of the installed solar panels, especially solar panels, in 2025, cannot generate any energy. And the reason is that the grid can't hold them.
The grid limitations, correct.
They need to invest in the grid. They need to invest in green infrastructure first. That doesn't need as much energy, if you see what I mean. And then the other thing that is very important is that China's electricity generation in 2025 has basically been free of fossil fuels. So I think China's self-reliance in its electrification is for real.
Absolutely.
It's a small problem that they cannot generate as much as they have installed in terms of solar panels or renewables, but they will. So
certainly,
I think
from a geopolitical point of view, their energy security is way up there, as it is with everybody, and particularly, as you said at the start of our conversation, in the context of everything that's happening now. We've got the Venezuela thing and more examples of how every nation has to ultimately probably become self-reliant, and in China certainly making inroads there. Alicia, you mentioned India. I'd like to just talk about that a bit. That is part of Asia. It's not part of ASEAN, maybe, but again, I mean, in the context of sort of long term, let's get your sort of 5-year view
Yeah.
on oil demand, because a lot of talk
Yes.
about sort of peak oil. Of course, initially
Yes.
the IEA did its turnaround in November. Yes, the peak oil is not going to be in 2030. They've pushed it out even further to 2050. But when we look at the two players within that, China and
Yeah.
India, in
Yeah.
terms of a broader outlook there, can producers, for example, in the Gulf, look to India really
Totally.
as a quick, not a quick fix, but very quickly coming in to sort of, I suppose, wipe up that demand loss from China, as you've just pointed
Yes.
out?
So basically, I have two good news for our listeners. One is India, and the other one is, of course, AI. But let's talk about India. India's electricity demand. So basically, overall, electricity demand in Asia grew in 2025 around 3.3%. Okay, and India grew double, 6.3%. Just imagine. I mean, it's like humongous, a humongous opportunity for the Gulf, in my view, both geographically, if you think about it, and the fact that India cannot be self-sufficient. It just can't. Its peaking objectives are so much, shifted in time, let alone the net zero 2070, and even the importance that India, frankly speaking, puts. It's not that the green transition is not important. It's that it makes India very dependent, even if it shifts to renewables, very dependent on China. So in a way, it's not the same story. China becomes self-reliant. India becomes reliant on China. So the speed isn't there in India's mindset because of this geopolitical reason. Therefore, India is a huge opportunity for the Gulf. The estimates are that I have in front of me is that India will drive global energy demand, basically 30% of global energy demand by 2050. That's a lot. So
Okay.
for me, India is the opportunity for those two reasons. First, obviously, very fast growth. We're talking about order of 6.5% without blinking. I mean, it's going to happen. And secondly, the delayed transition. If you put all of that together, plus urbanization, massively energy consuming, that India
Okay.
has to do,
Yeah, and
you
you
get
talk
it.
about urbanization. Of course, China's done a lot of that already, hasn't it? I
Yes,
mean, just very
exactly.
quickly,
Exactly.
Alicia, on terms
Yeah.
of the expectations for GDP and growth, you put out some figures there for India. China is expected to end the year, or it did end the year, 5% growth, more or less. We don't have
Yeah.
the official figures yet. How soon do you see that dropping below
Yeah.
5%? Do you see that dropping
Well,
next year,
it,
or
yes.
we need to give it another 5 years?
I think it will start dropping next year, although I have to say we still expect the government to announce 5% in its two sessions, so-called two sessions, which is in March, where they announce the targets. But I think it's going to be quite difficult to reach the 5% next year, and they may even rethink this target that they now have in mind to something lower, like maybe 4.7, something like that. What we know for a fact is that China's structural deceleration is unstoppable. And it's not because of bad reasons. It's because it has happened everywhere. It happened in Japan, in South Korea. So, I think we need to think of China growing around 2.3% by 2035, which is in 10 years. And that's half of the growth, literally. So less than half of the growth. So, and again, self-sufficient on energy. I mean, the amount of renewables China will have by 2030 is just mind-boggling. There and nuclear. So for me, the energy needs. Again, I want to mention though that when it comes to basically data centers, and 70% of the demand, electricity demand from data centers is located either in the US or in China. That's it. And we know that China cannot yet generate enough electricity with renewables for this additional demand. So there may be like a new peak, if you want, just because of this kind of unexpected, if you want, shock of electricity demand. But I
But
think
now,
China
but
will do
those
its
are
utmost to keep it
absolutely.
short.
Absolutely. Alicia, thank you so much for joining us today for the Outlook Forum for the year ahead. It's been great to have your insights on the macro outlook for Asia. All the best.